Hi everyone, it's me again, Leso Masango aka Cool. So today we're gonna be talking about real estate investment trust, also known as REITs. So basically those are your property shares, and we're also going to be discussing the tax implications on them. So companies that manage, operate, and own real estate portfolios consist of income producing properties like your commercial properties. So here are some of the tax or the benefits of owning REITs. As an investor in REITs, you stand to reap the benefits of owning property as an asset class without directly owning the property, which means that you don't have to deal with the day-to-day running and operating and management of the property. You don't have to deal with tenants not paying rent on time. You don't have to deal with maintenance of the property. That is done by the company that manages or the portfolio, the property portfolio or the REIT portfolio, and so you don't have to deal with all that, unlike fixed property where we have to deal with all that stuff. And another thing is that they don't require a large capital to start investing in, as we all know that fixed properties cost quite a fortune. So property shares allow investors who want exposure to the market without the initial or large initial capital outlay. So here are some of the features that comes with owning REIT shares. So generally REIT shares pay out at least 75% of their taxable earnings available for distributions to investors as dividends, which gives investors certainty that net income will be paid out. And another thing is that these REIT shares earn most of their income from property leases, which is quite relatively a stable income stream that is adjusted upwards annually to keep up with inflation. So REIT shares or REITs have a committee to monitor risk. Like any other investment, there is some degree of risk associated with REITs. So that is because of social and economical situations which are unpredictable and may impact on your shares either positively or negatively. So let's take a look at some of the tax implications associated with REITs. So as an investor in REITs, there are significant tax consequences that you need to be aware of. So normally payouts are made through dividends. So dividends from REITs are treated different from to normal dividends. So if you own a share in a listed company other than REIT, and it happens that you earn dividends as a result of owning that share is exempt from tax in the hands of the taxpayer. However, you need to declare the dividends to SARS, but those dividends are not taxable. However, there is 20% withholding tax that is paid by the company to SARS before the dividends are paid out to investors. And that is different with REIT shares. REIT shares are not subject to the 20% withholding tax like your normal shares. However, they are not exempt from tax. They are subject to tax in the hands of the taxpayer, and that depends on your tax bracket. So you have to pay SARS for income tax on your REIT dividends at your personal capacity. It is, however, possible that you want to reinvest your dividends. Your dividends are also going to be taxed as well if you decide to reinvest them. In a case where the share price increases, or the share price of your shares increases, and in that instant they attract what we call capital gains tax, which is to be paid when you dispose those shares. So when you sell those shares, you're going to if those shares have gained capital or increased in value, you're going to be paying what we call capital gains tax. You also have to bear in mind that there are different income thresholds for certain age groups that are exempt from paying SARS income tax. For example, if you are under the age of 65 years and below 78,150 annually, you do not pay SARS for income tax. That is about 6,600 per month. And again, if you are between the ages of 65 years and 74 and below 121,000 annually, you do not pay SARS for income tax. And if you are 74 years of age or above and below 129,850, annually you do not pay SARS for income tax. Thank you for watching this video. I hope that you have learned something. Be sure that to hit subscribe, and I will see you in the next video.